Good day, everyone. We are in session number 4 of the Board Bootcamp. This is part 1. In this part, we're going to be reflecting on reporting responsibilities and just jumping right into this particular part. We're going to be looking at the obligation of tax-exempt organizations when it comes to their reporting requirements for the federal government. So all tax-exempt organizations are responsible, or I shouldn't say all. There are situations, we'll get into that, where they are tax-exempt and they might not necessarily need to do an annual return. And we'll talk about that in this part. So, but most, the majority of nonprofits do have the responsibility of reporting up to the federal government a reporting return or information return. Now, the other obligation that nonprofits need to think about, as far as reporting is concerned to the federal government, is if they receive any financial support by the federal government, they have to be careful, because depending on the size and scope of that support, they may be also responsible, in addition to the information return reporting, to submit some type of audit or review statement showing how they're managing those finances that they're getting from the federal government, so in that federal or state. So they have to be careful. So these are the different requirements that we're going to talk about in this particular part. And I believe the first, Richard, is it you or is it you, Wayne, the first piece of it? Okay, so Richard's going to talk about the first piece of this this obligation that nonprofits find themselves into. Yeah.
So aloha everybody, I'm Richard Keto, and I work for Aaron. So I wanted to talk about the Form 990 and the board's responsibilities with respect to the Form 990. So as Aaron mentioned earlier, even though nonprofit organizations are tax exempt, they still need to file a tax return with the IRS. And that tax return is not, used to charge the organization a tax. It's an informational return. So the IRS, the federal government, wants to know about the nonprofit organization. So all nonprofit organizations, with a few exceptions, as Aaron mentioned, are required to file an annual Form 990. So the exempt organizations are primarily, if you're a religiously affiliated organization, a church, a school affiliated with a church, then you're exempt. Also, colleges, and I don't know if this would apply to any of you guys, but a college that is religiously affiliated, or a school actually that's religiously affiliated, may be exempt as well. So, for example, Sacred Hearts Academy, they're a religiously affiliated organization. They don't have to file a Form 990, but you can if you want. And I think it's a good idea, even if your organization is exempt from filing a Form 990, that you file it anyway, because it's really useful for your organization to learn about itself. You learn a whole lot about your organization through the Form 990. So, for example, St. Louis School, which I am an alumni of, they're not required to file a Form 990, but they do every year anyway, just mainly for internal purposes, just to find out more about themselves. So there's various forms of the Form 990, which I'll just really briefly get into, but just like there are many different forms of the Form 1040, the individual income tax return, the 990 has different categories as well. So not to get into that much detail in it, but depending on the level of contributions received and the assets that the organization maintains, they have different levels, Form 990A, 990EZ. I mean, there's different forms. So, but again, in my opinion, it doesn't hurt for an organization, even though they don't have to file the main Form 990. I think they should, everybody should anyway. because it's extremely useful information. Sure, it takes a while to compile all that information, but it's useful in trying to manage that organization. So that's my first suggestion, is do the Form 990 anyway. The easiest form of the Form 990 is actually kind of useless as far as helping the organization, because it's just a name, address, tax ID number, and that's about it. You know?
Yeah.
So it really doesn't help the organization learn about itself. So even if you are eligible to file a lesser version of the 990, do the whole thing, because I think it's useful. Another thing to remember about the Form 990 is the financial aspects of the form, balance sheet, income statement, those kinds of things, are actually only a really small part of the Form 990.
Yeah.
There's a lot of other information. In fact, if you include all the schedules, it can go up to 50 pages or more. So it's pretty extensive, but it gets into a lot of compliance kinds of things. The federal government wants to know if the organization is complying with certain regulations and rules, and what processes the organization has in place to ensure compliance with the nonprofit rules and that type of thing. So the bulk of the Form 990 is actually non-financially related to compliance, it's related to policies and procedures and that kind of thing. So anyway, that's why it's so extensive, and it gets really into a lot of details.
Yeah.
Which is why I think it's helpful to learn about your own organization to do that, but again, in many cases it's up to you. Board responsibilities. So, well, let me step back. Generally, the Form 990 is prepared mainly in-house because there's so much non-financial stuff in there. There's compliance stuff, what kind of policies you have. Those are normally prepared by somebody within the organization. They may perhaps get a accounting expert to help with the financial aspects, the balance sheet, income statement, that type of thing. But I would say 90% of the Form 990, you're gonna have to do yourself, okay? And it doesn't really help to hire somebody to do the Form 990, because all that person will do is ask the organization about all the different kinds of questions. I occasionally get hired to prepare a Form 990, and I love it because 90% of the questions I ask them for the answers to, and I just check off the appropriate box. So for us preparers of the Form 990, it's very easy. We love it because it takes a lot of time, but it's mainly time spent with interviewing, talking with people within the organization. And the only real meat that the accountant who will help you prepare the Form 990 is the financial statement part. So again, don't hire Aaron to do a Form 990. Just hire him to do the financial parts of it, and maybe he can put it all together at the end.
Yeah.
But don't hire him to ask you questions about your policies and procedures.
I don't know. I'm gonna challenge Richard on this, because I think, and you all as well, I believe that if you do have a person, an accounting firm that's actually preparing your 990s, and they do it their normal way, I would say, because now they're questioning, the different members of the board to address those questions, but I'm sending an email to the treasurer, I'm going to send an email to the chair, I'm going to send an email to the secretary to answer these questions. But it might be a good idea, because back to Richard's point, is it helps you understand your organization. It might be a good idea because they're going to charge you 5, 10, 20 hours anyway, right? So what you need to do is you might want to say, just let you know, for your bigger nonprofits, some of you all, it's probably 30 hours, but I think it might be a good idea to say, you know what, let's maybe have one of our board meetings where we invite our accounting firm in to go over these questions with us all, so that we all, knowing full well that some of these, the treasurer's gonna have to answer, the chair's gonna have to answer, the secretary's gonna have to answer, but everybody's aware of, oh, I didn't know that. Oh, wow, okay. So everybody's being, it's transparent, first of all, but then two, it gives you an opportunity to learn a little bit more and get a little bit deeper into the organization, right? So I think that probably is a healthy practice, because again, if you all have, and I'm sure most of the bigger, you all that are bigger have, your accounting firm and they're doing their thing, but maybe you can say, hey, accounting firm, like I said, you're charging us anyway, why don't you come in when you do that section and go over it with us as a full board? Let's just carve out an hour and a half or however long it takes, and we'll go over those different questions, and then we'll all address them together, and it'll help us learn a little bit more about our own organization. So I think that might be a really, good idea.
So I'm not suggesting that nobody review the rest of the non-financial parts of the Form 990.
Yeah.
I think your accountant, outside accountant, should review the entire Form 990 anyway for completeness and wait a minute, that doesn't sound right, and go back to the to your organization and say, did you really mean this? So you definitely need to have an external review of the Form 990. So Aaron, you can
I'm gonna push back on Richard again, because I think that's right. But I believe, and Richard and Wayne can kind of rid me a little bit for this, but I believe it may be smoother. And I'm talking from putting on my accounting hat. I think it might be a bit more smoother to make sure that all the vicissitudes of that return are appropriate. So I would leave it in the hands of the accounting firm, but I would the review has to be, both parties need to know what's going on that return. The accountant needs to understand what's going on that return, so that when we submit this to the IRS, there's no issues that can come down the pipeline that we can't address in a very smooth, in a very proper way. And the other part that needs to be aware of everything is the board, right? So both need to be very attuned to what's on that return. So what I believe is, if you leave it into, if you have your accounting firm, the accounting firm go ahead and prepares it, they do the questioning, they kind of get the information, because they're getting all the information from the organization anyway. Management is providing the financial data, the board is providing the data for the questionnaire, but then that return needs to go into the board peer review, and they need to themselves, without the accountant in the room, review those returns to make sure that they understand and they're aware, because at that point they can have questions come up, and then they can invite the accounting firm back in and say, hey, we got some follow-up questions. Can you explain this? Can you explain that? And management also, the CEO of the nonprofit, the executive of the nonprofit, might also be in the room as well, because when they have these questions, because remember, the financial data is coming from management, right? And they're providing that to the tax, the accountant, and they're putting that together. The informational questioning data is coming from the board. So they have management in the room, the accountant in the room, and they're in the room. So they can all look at this, and then those questions can be addressed fluidly, right? So I think it's a good idea to make sure, again, to just make sure there's no confusion now. Like, you have two things being prepared and things of that nature. Have one entity involved in the preparation is my suggestion, and then make sure that there's a process involved where there is a continuous review of that, and then after the review, again, board oversight. Remember, that's the responsibility, is oversight. We don't understand. Okay, if you're the board and you don't understand, hey, you need to, it's a question. Even if, okay, that means Mickey Mouse, we need to understand what that means. So that's my little suggestion in that thing.
So the way I do Form 990s for clients is, I have the client preliminarily prepare a draft Form 990.
Good idea.
And then, you're right, the accountant that you hire should be solely responsible for putting it together. So the accountant should be sitting down then with people, in the organization, going over every question, just so that there's no misunderstanding or whatever. And that gets us to the point about the board's responsibility with respect to the Form 990. The board is actually responsible for everything that goes on in the organization. So as a board member, because the Form 990 is primarily non-financial, there's not the excuse that, I'm not really good about financial stuff. So the board, each and every member of the board, because there's some liability and some fiduciary responsibility, they should understand the Form 990 pretty well. So at the very minimum, board members should be reviewing each and every question on that Form 990, which may take a lot of time, but it's definitely worth it, and it needs to be done, in my opinion. So Aaron is right that there needs to be a board meeting where the topic of discussion is review of the Form 990, so that every board member understands what's on that Form 990. Because again, because of board responsibility, if you as a board member agree to approve the Form 990, you're basically saying, yep, it's right, everything on that Form 990 is right. If there's anything that's egregiously in error, you could be held liable, so you should know what's on that Form 990.
And you're not, and that's now, here's the other point, because I believe Richard and I went over this in a previous session. That 990 has a section, and on that section, I believe, correct me if I'm wrong, each and every board member's name is listed, so they know who you are. I think the address is on there as well.
Yes.
I think so they know who you are. So it's not as if you can divorce yourself from that responsibility. So that is if something hits the fan, if we were whatever from complaints or what have you, and it bubbled up to the IRS for whatever reason, say, let's investigate this particular nonprofit this year. So we're going to flag them, and we're going to flag them for audit. They're not going to the accounting firm. They're going to go to the nonprofit itself, and the board's going to have to be the go-between between the agency and the organization. So that's 990 is ultimately the responsibility of the board. So yeah.
And just to stress the importance of the Form 990, that's the way the federal government knows what you as a nonprofit organization is doing and how you're doing it.
Yeah.
So if any nonprofits get into trouble with their tax exempt status, not normally it's through the IRS review of their Form 990. So you really need to, if you want to avoid problems with the IRS and the federal government, you really need to make sure that Form 990 is done well and accurately. So it's really important. It's a really important document.
Critical.
Yeah.
Very critical.
Yeah, and I think to add to that, if you take a look on the internet, you can find the format that the IRS uses in the event that they audit a nonprofit organization. And the auditor has guidelines, and the guidelines basically relate to every aspect and every section of the Form 990. Basically, the IRS auditor will be looking at different things from a compliance perspective that should have been done, and just basically checking off the box if you've complied with your responsibility as far as filling out that Form 990 is concerned. And of course, one of the sections of the Form 990 this is the full-blown Form 990. It does require certification that all board members have seen the Form 990 and have approved it, so that they need to understand that they have to at least look at it. Now, we talked about in the previous section about board responsibilities and their fiduciary responsibilities, but also the idea that boards, directors can rely on experts for their expertise. So they may not be, a board member may not be fully versed in how Form 990 is filled out, or even how, in income statement or a statement of activities, statement of financial position. They may not understand much about the numbers, but they can rely on expertise from a professional outside to say that, okay, I believe that the organization is doing what it's supposed to be doing in a way that it's supposed to be doing it, at least from these legal and financial and accounting perspectives. And so it does give the board members that much more that they can rely on, and that much more that can protect them from personal responsibility and personal liability.
Another aspect of the Form 990 that people don't even think about a lot of times, it's a public document. So anybody
Yeah.
can access
Yeah.
the Form 990s
Yeah.
of any nonprofit organization. Many organizations post it on their own websites. There's a website called guidestar.org that lists all nonprofit organizations in the United States and has a link to their Form 990s. And donors, increasingly these days, donors look at that Form 990 to determine whether or not they want to donate to that organization.
Yeah.
So I personally will not give money to an organization unless, because I'm an accounting nerd, I just love to look at those kind of forms.
Yeah.
So I review the 990 form just to get a sense of how the organization will manage my money that I'm giving to them.
Yeah.
Just to get an indication, because there's some things in there like how much of the money that is donated to them goes to the program versus how much is administrative costs. So for increasingly, donors are relying on that Form 990 and deciding where they're going to make their donation.
Yeah.
So that's another reason that you
Yeah.
need to make that available to the public and make it sure it's accurately done.
That's, I just, and then one more, because we have to get on to our the obligations when it comes to the funds, federal funds. But that's a good point, and just to add to that, the IRS actually on their site, there's a section where you can pull up the 990s of exempt organizations. Now, I'm thinking in my mind, if I was, a tycoon, a billionaire, I say, I want to give a little bit this year just to kind of just random nonprofits. But I want to make sure that they're healthy, they're existing, everything's up to snuff. So I might have my assistant, hey, I looked at these different nonprofits, I want you to check them out and verify them. Think about this. If I don't, as a nonprofit board, keep diligent about filing my full 990s, then they're not going to be where they need to be. So if I say, hey, I tell my staff, I want you to check these out, just do some due diligence, and maybe one of their steps is, okay, you're going to look on GuideStar, that's cool, but the other step is, let's go back to the source and see if they're actually submitting information to the IRS themselves. So if I'm the assistant, I'm going and I'm looking, if I can't pull down the 990, do they exist? Okay, you might exist. You might do a P card, the short form, or what have you, but the full 990 is not on there. So that might just get excluded from the list. And remember, I'm a billionaire, I'm a tycoon, and I'm just trying to give a little bit away. I'm not going into depth. And so if I don't see you there, so that's something that you might want to think about, as far as, because there are, and I know some individuals like that. Like they don't really want to get into too deep. They just, okay, they're helping young people. I want to deal with them. I want to give to them. Just make sure that they're in existence, and we'll help them out. If they can't verify that you are who you are, that's something that you might miss out on. So that's an important fact. So let's switch gears and let's talk about the funds, because there are a lot of funds out there. Matter of fact, I, as an accountant, am dealing with this a lot because the government, because of where we are in our history, we're still in the COVID era, and that era has also impacted our economy in just various ways. Mostly kind of challenging when it comes to nonprofits and other organizations. So the federal government and they do this not just in times like this, but throughout our history. They have monies set aside for nonprofits, different organizations, farms, just different organizations doing different things to meet certain needs of our nation. So a lot of money out there, billions of dollars out there, and you might be a nonprofit that is doing something that is right in line with the funds that are being offered by the federal government. Now, that's cool, that's awesome, and great, but as a board, if you have a grant writer, you are approved, you receive those funds, there's a lot more to it. And there's things that you need to do as a board in managing those funds. So now we're going to switch gears and talk about that part of it. Like, what is it that we, the board, need to be thinking about when it comes to receiving these types of funds? So I'm going to turn it over to Wayne to get us started on this topic.
I think this might be really short, but it's very simple. There's lots of money involved when you start talking about money that comes from the federal government. I'm not sure if you're watching this, what size nonprofit organization you actually are part of. A lot of people, they hear about the opportunities to get federal money, and they start literally salivating, because there's so much money on the table, and it's, you're talking hundreds of thousands to millions of dollars in many instances, and a lot of small organizations really would not be able to qualify because they wouldn't have the capacity or the infrastructure to be able to do the kind of things that the government is going to be asking an organization to do with these large amounts of money. That said, there are two basic pots that I can relate to as far as federal funding is concerned. One is a grant, and the other is a contract. So grants, as you are probably aware, are just money that's given. There's no obligation to repay it. The obligation is to use the funds for the purpose that they were intended to be used for. So basically, it's like a gift to the organization, so the organization can do its work in helping the people, the community, the planet, the animals, whatever it is that they have set out as their mission to do. So you can get a grant, and there would be the obligation to make sure that the money was spent in the way that it was supposed to be spent, and you have no obligation to deliver any types of contract services. So that if it's a grant, then basically the fiduciary responsibilities of the board are basically what have to be complied with. Making the board members have to make sure that the money is being utilized for those purposes for which the organization said that they would utilize those monies for. Sometimes you also have contract services, right, that the government cannot provide as efficiently, in many instances, services to the needy, as well as a nonprofit could, right? So that the government, instead of creating an agency or a branch or an entity to provide services to the public, will contract with nonprofits to provide those services on behalf of the government, on behalf of the community. Now, in those instances, there are different rules of accounting that have to be respected as far as contracting requirements. So federal contract obligations and the way that those monies are accounted for do require a type of expertise that you may have to find someone that is able to do that on behalf of the organization. So it might not be something that the board treasurer or the board as a body is capable of dealing with, because the requirements are so intense and so complex that it would be beyond what you would want to ask for any board member to be able to do. So in those instances, they would have to be able to just make sure that things were being done in the way that they're supposed to be done by those people who have expertise and skills in doing things that are required as far as federal contracting rules are concerned. Aaron mentioned COVID, and one of the things that a lot of organizations started to see, and nonprofits were eligible for some of these monies as well, was the Paycheck Protection Program, the PPP program that the government came out with, that basically extended funds to organizations that had employees so that they could maintain the employment status of these employees during the COVID outbreak, when it was at its worst, and organizations, businesses, everybody was just shut down. And then you realize, of course, if you're not doing anything, then all of your employees aren't going to be getting paid. And if they're not getting paid, that's going to be a severe hardship on these people that you know very well, and that you're trying to be responsible for, and that you're trying to help out. So the Paycheck Protection Program allowed for continuation of salaries for people, even though they were not necessarily coming into work every day, just so that they could get money, so they could continue to live their lives and they could survive during this horrible epidemic that we've been experiencing. There are board responsibilities, of course, if a nonprofit were to get these PPP program monies, to make sure that they were being applied in the way that they were supposed to be applied. So basically, the biggest responsibilities, that fiduciary responsibility that board members have, to make sure that the organization is doing what it's supposed to be doing and how it's supposed to be doing it, and then as far as the monies are concerned, to make sure that the money is being stewarded in a very good fashion, and that it is not being wasted or being pilfered. We talked about the Form 990 and what organizations have to do, and then how donors look at the Form 990 as an element of whether or not they want to support an organization. They look at the 990 and they see what activities are going on. Because the 990, as it was amended a few years ago, basically became more of an information form that included things that the board was doing, that the organization was doing, and it became more of a big picture storytelling kind of device that described what the organization did, how it did it, who was doing it, who it was benefiting, and whether or not the organization was doing all the things that were necessary to maintain their nonprofit status. Because we understand that in order to get this benefit that the government gives to certain entities to not have to pay taxes, when they become 501c3s, when they become 501cs, when they become nonprofit organizations, when they become charities, that the trade-off for that is a lot of reporting, a lot of fiduciary responsibilities. Right? You're not going to pay taxes, so you have to be very clear and very transparent in what you're doing with money that you're getting, because you're not contributing to the tax fund in any way. So there's a lot of things that have to go on there. The one thing that I would I would like to mention as far as board responsibilities in administering and watching over funds that come from the federal government is, again, because these monies are very large generally, right? Hundreds of thousands to millions of dollars that become available to an organization. Many organizations may not have been set up for this kind of program or this kind of funding. And many organizations have not ever had that kind of funding. So they didn't know what the responsibilities were, right? And unfortunately, what happens in some instances is that someone within the organization is designated as the responsible person for this, right? You got one person that seems like they're willing to do it, they got the energy, they got the skills, they got some knowledge, and they're willing to take on the responsibility of administering this federal grant or this federal program that's just been given to the organization. And it's the first of its kind that the organization is dealing with. A lot of times people do not know what it is that's going on with that money. Right? There's one person that's got the keys to the kingdom, one person that's got the checking account, one person that's administering all of this, and you have to hope that they're doing the right thing to start out with, because it takes a while to catch on as to what's going on, right?
Yeah.
So a lot of times, monies are inappropriately utilized. And it is something that is hard to detect because what's happened is you've given it to one trusted individual to administer, and then you find out that they have figured out that, hey, I can take a lot of this money for myself or for my own purposes, and who will know? Because there's only one person that's watching over this whole, and they're the one that's reporting to the board saying that everything's okay. It does happen in some instances, so that's the one thing that I would want to caution people about, that if they do have federal funds, that there are going to be added responsibilities on the organization and thus on the board to make sure that those monies are well utilized.
I want to pull a little bit at that grant stream, because I know that in those cases where there's more funds grant-wise, not contract-wise, but grant-wise, that is available, and there are things that we're granting you this money, but this money is to be used for these specific purposes. So there are instances where there's a bigger nonprofit, like in our state we have Oahu. So there's a bigger nonprofit, and it says, okay, we can be the receiver of that money, or those funds, and we can then divest in the smaller nonprofits. But here's where I want to kind of challenge us all to kind of discuss a little bit and flesh this out. What is my responsibility as the bigger nonprofit? So I myself am not doing the mission or using the funds, but my purpose is to divest these funds to these smaller nonprofits, and either me or themselves understanding how we need to use these funds to be compliant with what their purpose is. What's the responsibility or the onerous on the big guy, and what's the onerous on the smaller guys? And is it different? Is it the same?
So the grant is to, in this case, Oahu. Oahu is the receiver of the grant. As such, their responsibility is to keep track of all of the funds and what they're being used for, and make sure it's in accordance with the stipulations in the grant. So they have to package everything. And and we'll talk about an audit in a second, but it's their responsibility.
Okay.
So going down the line, in order for Oahu to get the information, the organizations that Oahu distribute the funds to, they're going to have to keep track of it as if they were receiving the funds directly, because Oahu has to then consolidate everything. So they need the information from the lower. And then if there are several layers like that, it gets pretty complicated, because every layer needs to keep track of it. And I'll talk about that in the next session on financial review, but that's one of the things with being a pass-through. If you're only a pass-through, it seems like there's no liability, no responsibilities. Man, you could really mess yourself up, because just because you're passing it through doesn't mean you're absolved of all responsibilities.
And the reason we mention that is because, as Wayne was saying, like some and we probably all do this at times. You see these big funds, these big bucket of funds, like, wow, that is similar to what we do, and then you start salivating. And these bigger organizations do the same thing. I'm gonna tell you why. It's because we can administer administration fee. We're not necessarily going to use we're not at the lower levels in the communities, but we understand and know smaller nonprofits that can actually use these funds for the purpose that they need to be used for, and we have the capacity, being as large as we are, to either train or instruct on how to use these funds. But we're just focused on that administrative fee, but we still have responsibility. We now have to be the IRS, basically, for the ones that we're just distributing these funds to. So that's that's something to keep in mind to my larger, you know.
And then there are, just as you're saying, this concept of fiscal sponsorship.
Mhm.
You know, this is when a large nonprofit that has a mission that fits with the funds that are available, receives the funds and then in turn tries to distribute it out to smaller entities. Now, a lot of times what happens is that you can have this happening in just your day-to-day. It doesn't have to be a very large nonprofit to get involved in a fiscal sponsorship. So let's say, for instance, you have an organization that has as its mission the support and enhancement of the arts. And then there are city and or county grants that's available. Like you see some places, like here in Honolulu, if you go up and down certain streets like Waila Avenue, they got all of these little murals on these traffic boxes.
Right.
And you know basically that it was a government project to do that because they're painting the street lights
Yeah,
and the traffic
yeah,
boxes. So it must be the city that's giving out the money for that, right?
Mhm.
But then you don't necessarily have an artist that's a nonprofit in and of itself
Yeah.
that can qualify for this.
That's right.
But they're struggling and they want the money and they can do the work. So they go to the local nonprofit that they know that supports the arts and say, hey, would you be a fiscal sponsor for me? There's this money available and I'll write up the grant proposal and you basically send it in and send it to the city and then the city will give us the money and you administer the money and you pay me, right? So that the individual can still be a for-profit entity, right? A sole proprietor essentially, doing the work, getting paid, and then having it paid through a nonprofit that received it as a fiscal sponsor and then administers the grant because the work is to get the box painted.
Yeah.
Right?
Yeah.
And then they just basically have to make sure that happens and then they make the payments just like they would pay for having their office painted. Right? They would give the painter a deposit and would give them the rest of the money when they finish painting the office. And then it will be funds that the nonprofit has available for maintaining their office space. Right? And so in a similar fashion, these fiscal sponsorships can support non-501c3, non-charitable, non-nonprofit entities. Right? So you can have a proprietor that's doing a job and getting paid just like they would be getting paid on a contract for services, and they pay taxes on it. Right? But the nonprofit is the one that received the grant money. Because the stipulations of the grant many times are going to say that only a nonprofit can receive this grant money, right? And then how the nonprofit chooses to do the job that's what the grant is for is really up to them, right?
Yeah.
Because
Yeah.
the funder is really not in a position or shouldn't be in a position to micromanage how the activity actually is done.
Yeah. As long as it's done. But yeah.
Although, Wayne, as an attorney, give me your opinion on this. So let's say there is a pass-through entity that passes the funding on to the smaller organizations. So let's say that the main organization gets a federal grant for preservation of culture, for example, okay? So that organization gave part of that grant to an organization that helps the homeless, which could be argued that has nothing to do with preservation of culture, right? So could that pass-through organization get into trouble or have to return funds if that's the case?
Yeah, definitely would probably have to reimburse for what they did, the utilization of funds that were not towards the actual grant objectives. The funder always has the ability to claw back those amounts that were inappropriately utilized.
So in your experience for federal funds, does the federal government do that? Do they try to get back some of the funds?
They more than likely, my experience has been that they don't do that.
Yeah.
They don't try to get it back on the first instance. But what they do is they debar you. They will not let you qualify for future funding.
That's
Right, so, and that's what really
That's really
hard to
Yeah. So getting back to your comment about that main organization,
Yeah.
they really gotta watch out.
They
Keep
gotta
track
be
of
sharp.
stuff.
They
Yeah,
gotta be
they gotta
sharp. They gotta be sharp.
And then if it's like Oahu, maybe they can survive the hit. Right?
Yeah.
Because they
Yeah.
have so many other sources of funding.
Mhm.
But as you mentioned about transparency,
Yeah.
if you get debarred for any reason, other funders are gonna say,
Yeah.
I'm not really.
Yeah, yeah.
So you're
So
saying,
even
yeah.
if it is something that would be specifically for the objective that that organization, is set up for, they may never be able to
Yeah.
see that kind of funding
Yeah.
again.
Yeah.
And that could be really
Yes,
detrimental.
Yeah.
absolutely.
Yeah. Now, spending on that, there is a way that, because some of these funds, we were talking about small amounts, large amounts, mid-grade amounts, and some of these funds may be large enough or so large that the federal government themselves say, you know what, we're giving this to you, but we just want to make sure you're using it for what its purpose is. Because as Wayne said, it may be a situation where the funds or the monies that are available are not just available for this year, they're available for the next decade. So we want to make sure that these funds are being used and will be used for the intention that they were set up to be, right? So in those cases, you have, things that you get into when it comes to audits specifically to the funds that you were given. So I'm gonna pass it over to Richard, but this is a very critical area as well, as far as how the government understands if these funds, are being used for the purpose that they're intended to be for.
So any organization that receives federal funds, and specifically funds from the U.S. federal government, are required to have an audit done, just as Aaron mentioned, to make sure that we're spending the money on what it's supposed to be spending the money on. So back in the old days, and this was while I was still doing audits at a CPA firm, let's say an organization got 10 different grants from the federal government. The requirement was they needed to get 10 different audits done, one on each grant, which for many organizations was actually a pain in the butt, because that's a lot of audits, and it had to be distinct, discrete audits for each individual grant. I don't want to age myself, but 30 years ago or so, the federal government realized that, that's kind of a burden on organizations. So they instituted what's called a single audit plan. A single audit basically is combining all of the federal grants, and rather than having a separate audit for each grant, they combine them all into a single audit. So you only have to do one audit now for all the federal funds that you get. Organizations, well, like I said, if you get federal funds, you got to do an audit, which is why I've known of smaller organizations that reject small grants because of the humbug of trying to do an audit. They get a $10,000 grant that costs them $8,000 for an audit. It's not worth it. So, but nonetheless, you need to do an audit. It can be a single audit combining all the federal funds, and there's really no way around that requirement. So the audit, unlike the audit of a for-profit business that you think of an audit as being strictly financially oriented, a single audit for the federal government, there's as much, similar to the Form 990, there's as much auditing of compliance and whether procedures and policies are being followed as the numbers themselves. So it's a little bit more extensive than a normal audit, actually.
It's just a lot more. In some cases, it's a lot more extensive than a normal audit. And as Wayne mentioned for the 990, there are sites that you could go to understand if the IRS was about to audit you, what things they're going to look at. A single audit, because it's a federal audit, you have the very same locations that auditors go to assess and to review and to audit you. You can go to those very same places and know what items do we need to have available or be ready to deliver to our auditors when it comes to our single audits. So it's the information's out there, so they expect you to, and they don't put it out there by accident. They expect you to know what and how you need to be using these funds. So if you're not using those funds that way, you're not going to have an excuse, basically.
So that's one good thing about a federal single audit. You're right. They tell you exactly
That's
what they're
right.
going to be looking for.
Yeah.
It's the guide that auditors use
That's right.
to audit the
That's right.
organization. So then the client or the organization knows what the auditors are
public
looking
information.
for. Yeah, and it's called the Blue Book, I believe.
Yeah, and you can. I think if the site hasn't changed, the OMB.gov, you gotta do some searching now. It's OMB,
I should know
something like that.
Yeah, there's a specific
It's a
number, and I
specific
can't
site.
remember.
Yeah, but
yes. So
yeah.
if you are involved in a federal audit, get that and contact.
Yeah,
Aaron. You'll find out by the time you
We'll
contact.
put the links
Right.
down below. We'll put
Yes.
the links down below. So
It
yeah,
used
yeah.
to be an A133.
Yeah,
A133,
A133.
yeah,
Right?
yeah.
It is. It's
Yeah.
still
It's
an A133.
they have others.
Yes.
They have others
Yeah.
as well.
That's
yeah,
for
yeah.
different kinds, but yeah.
What's also interesting about that, when Richard asked about the organization that was the umbrella organization that supports cultural enrichment and then did a project for homeless, and whether or not that would trigger any kind of problems. In an audit, you'll actually have some of the compliance features to be examined as to how did you select your client?
Yes.
How did you select the beneficiary?
Yeah. Yeah.
You know, so like I've seen organizations where they're supposed to be working with certain individuals that have certain conditions, and a question came up as to how those conditions were vetted and how the patients, the clients that were being served were being selected, because there were questions that had been brought up as to whether or not these people were actually in the group of people whose services were supposed to be performed for, or why was it that it had extended to other areas. And that's just another way of making sure that the organization continues to be true to its mission.
That's right.
Right.
That's right.
So as an auditor, I often had not trouble, but a point of contention often was whether or not the organization is following the guidelines of the grant, the federal grant, as far as mission,
Yeah.
and trying to see if, as that's part of the audit every
Yeah.
time,
Yeah.
is the organization spending money on what they're supposed to be
That's
spending
right.
it on for the grant?
That's right.
Sometimes there's some gray areas.
Yeah.
I mean, it's pretty clear, like, if it's a cultural grant and you give it to the homeless, that's no good.
Yeah.
But there's often gray areas, so that
Interpretation,
becomes an
yeah.
interpretation, a subjective kind of discussion with the auditor. And you have to justify why you think the money was spent on something related to the grant. So that often becomes an interesting discussion at times.
So hopefully, this part one of session 4 was very informative. We went over a lot of detail with you, and if any of these areas are areas that you feel that you really don't have that much information or that much experience in, and you know as an organization and as a board of your organization that maybe we probably should be thinking about some of those things or doing them. Maybe you want to investigate a little bit more, to make sure that not only you, but that you bring this up in future meetings that you will have, just to make sure that you all are doing all that it is you need to do as far as reporting responsibilities. That will end this part. Thank you.